All right, we'll call to order the December 9th, 2013 meeting of the Oklahoma City Post-Employment Benefits Trust. Appreciate everyone being here on this very cold day to walk over from the garage. The first item of business we have is to approve the minutes from the November 18th meeting. All in favor? Aye. Any opposed? All right. Next item that we have is receiving the monthly investment report. And we don't have anyone here to present anything, but if there's any questions, we could certainly pass those along or see if we can get those answered. One thing I did ask, if you noted, I'm just going to point out on, I guess it's not page number, but the summary page on the third page where it shows, or the second page, I guess it is, of the actual report, that the Thornburg International, we talked about putting them on watch. And one of the things I had talked to Doug about, because at another pension meeting there had been some discussion about this issue, was he was going to add in, we're keeping the MSCI EFA as the benchmark, but that MSCI ACWI XUS is another one that they're using because the EFA is actually on developed countries or developed markets only, and the ACWI XUS is a comparison that has a blend of developed and emerging markets, and Thornburg actually has some of its investments in emerging. So he said we would just add that one, even though our formal, he said they like to keep the EFA because it's a little bit, it's a more recognized standard with the developed countries, but he would add the ACWI XUS just so we have that for comparison purposes. And he said the next time he's here, he'll discuss that with us a little bit further. If there are any questions, I'm sorry, did you have a question, Laura? Okay. If there are any questions then, can I get a motion to receive the report? All in favor? Aye. Any opposed? All right. Next item is to accept the interim financial statements for the 4 months ended October 31st. Glenn? Oh, resolution. Back up. I'm sorry. My bad. Colin is who I need to call on. Colin is going to just give us a real quick briefing on the renewal, on the resolution approving the contract renewal with Blue Cross Blue Shield for our dental insurance. Sorry about that.
You're rolling today.
Yeah, I was ready to just move through.
This is the fourth year of the Blue Cross Blue Shield contract with the dental insurance. The first 2 years were fixed prices for us with plan years 11 and 12. Plan 13, we had a 5% rate increase. For plan year 14, we'll go down 14%, almost 15. The deal is, what's going on is that we've had like our loss ratios at 72% over the past rolling 12 months. So that renewal has come in very well because our loss ratio is so good. And so we're going to pass on that cost reduction to all our members and the retirees.
Good. All in favor? Thank you, Colin. Next item now is the acceptance of the interim financial reports through October 31st, and Glenn will just give us a summary on that.
Good morning. I'll keep my comments brief this morning and be speaking from page 6, and just talk a little bit about the income statement. This is for the 4 months ending October 31. The main information here is that the Opebt Trust is continuing on its normal track of increasing the fund balance. And currently, the net position, as it's now called, for Opebt is $29.6 million, as compared to $21.4 million a year ago, and that's a $8.2 million increase from last October and a $3.3 million increase from July 1. The majority of the increase this year is about half and half from investment earnings and from the contribution rates into the plan over the premium rates. And of course, as you know, from the plan members, the rate up 2%, and the premiums were down in the indemnity plan, which is a majority of the the health plan members. Unless there are questions about the position, I would just point out, as we traditionally do, on page 10, the target of investments, we're pretty much in line with those, 61% in the domestic equities compared to the target of 60. So we're over about 1% there, and generally the overages come from, in one particular element, come from the new funds coming into the plan and adjusting for those as we go along. So that resulted in fixed equities being a little bit under the target. And currently the treasurer is holding $2.8 million for cash flow, as noted in the note that one there. Anybody has any questions?
How often do we rebalance?
It's usually based on the recommendation of the Gregory W. Group. We will usually do a cash flow, and we monitor that $3 million balance that we hold. And if we get in excess of that, we'll usually go back to the Gregory W. Group and let them know, and then they just tell us how they want to distribute it. It's usually just kept in line with the allocation.
Thank you.
Glenn is also going to cover the June 30th report for us, so if we can just go ahead and accept the acceptance of the October 31st report. All in favor? Any opposed? All right. So Glenn will go ahead and review the June 30, 2013 report.
Okay, the report includes the report, and we gave you a hard copy this morning in front of you, and also includes the management letter to management from our auditors. I'll first address the report and then move to the management letter. I may have said this before. I'll be talking again from in this case from page 8, which is the income statement. I think I've mentioned this before, but this year under a new accounting standard, the financial statements have changed from statement of net assets and statement of changes in planned net assets, to the statement of net position and statement of changes in planned net position. A little terminology change, not much other impact, particularly for Opebt. So when we refer to net position, we're talking about assets minus liabilities for Opebt. So the current net position of Opebt at June 30, now this is moving back from the October report we just looked at, $26.3 million at the end of June compared to $19.1 million the year before. So that's a $7.1 million increase for the year, and The significant reasons for this is the increase in investment income of about $1.5 million for the year over the previous year, and the decreases in the benefits paid of about $1.6 million, primarily from the indemnification plan. Because the rates were reduced, net revenues from the indemnity plan were only $1.2 million for the year, but the additional city contributions as a result of the rate change and the city continuing those rates contributed to the net position increase. If there are questions, I'll move back to the actuarial report, which begins on page 20. And talk just briefly about the actuarial report, page 24. And I'll move actually down to page 27. Gives a overall position of the Opebt. This study reflects a decrease, actually, in the overall liabilities, unfunded liabilities of Opebt from $468 million the previous year to $414 million for this year. That's a result primarily of premium rates. There were no plan changes or any other actuarial assumption changes made, so it's all from the data of the plan itself. Also in 2013, in the bottom part of that page, shows a reduced ARC from 36 million to 32 million. The city is putting in about 20 million, so we have about a $13 million per year shortfall in the ARC, paying what we should be paying into the Opebt plan. If there are no questions, then I want to talk just briefly about the management's letter, which is included in your packet. You don't have a hard copy of that. Happy to report that there were no material weaknesses or significant deficiencies in the accounting and financial reporting for Opebt. There were 2 items that were auditor comments. The one item is a past adjustment. Past adjustment, terminology-wise, simply means it's an adjusting entry that should be booked in the books, and management decided to pass on it. In other words, to not book that entry. This particular entry was made for the first time last year, and it dealt with the IRS change in status. And the auditors felt like we should book an entry for estimated payments for penalty, for IRS penalties, and we do not feel like we would probably have to pay that. Looking at other entities had similar situations, and therefore we chose not to book that entry. They'll carry that past adjustment in the annual report until there's resolution to the IRS issue. The second issue was that they identified was that there was an error in establishing the premium rates for the prescription drugs, and it was simply an error between the under 65 retirees and the over 64 retirees. It did not have an impact on the financials or the overall position. And it did not have an impact on the actuarial study because the correct rates were used. And so essentially it had no impact other than to the retirees themselves on the payments that they made.
And that's been corrected.
It has been
corrected starting January 1 of 13, right?
That's correct.
And that concludes my comments on the management letter. So if you have any questions, be happy to.
Are there any questions? We do want to point out that this is Glenn's last meeting with us. Glenn is going to be retiring unless we can talk him out of it. And I've tried multiple times, and I'm not being successful. But we're really going to miss Glenn. And he's done a great job for us and done a great job in the accounting services, and I'm going to especially miss him. And I appreciate your service, not only for Opebt, but for the city as a whole.
And I will miss working with the members of the trust. I was here when this trust began and was involved in the development of the trust, and have enjoyed working with each one on the trust. And as Craig said, this will be my last meeting with the trust.
I can't say enough about your service to the trust. I can so vividly recall when we first started talking about this issue, some of us, and I might be among them, wanted to pretend that this was just a paperwork exercise, that the GASB was overreacting in their efforts to have us identify this liability in our financial statements. And you were instrumental in pointing out that this really does affect the city's long-term health, and I think nationwide we've seen the impact of that on many other municipalities, and our efforts to address this will serve the retirees of our city far into the future, and I appreciate very much the work that you did in not only helping us to set up the trust, but convincing us that the need was important. So, thank you.
Well, thank you. And I do think the work we've done has been and will be helpful, particularly in the next 2 to 3 years when the new accounting standards will be issued for Opebt trust, which will actually require us to book that liability on the books. And so we've kind of set the stage. We've been working toward that resolve, because if in 3 years from now we have to book $418 million liability on the books, our balance sheet's not going to look very good. So, in the cities, basically, where that liability shows. So, I do think the work that we've done is kind of moving us toward that direction, and I know you'll be working in the next couple of years before those principles come into play to address that.
Certainly didn't mean to imply that we were done addressing this problem. First step is admitting you have a problem.
Glenn, I just wanted to concur with the statements that have been made. It has been a pleasure working with you. Truly, truly hate to see you go from the personnel department standpoint. We've certainly enjoyed working with you. We worked with you on a number of projects, and I'm sure you've put some things in place to help us move forward. So just want to thank you for your service to the city. Going to miss you.
Thank you. I'll miss you all.
All right. I need a motion on acceptance of the financial report for the fiscal year ended June 30, 2013. All in favor? Any opposed? All right. The next item is to receive the Internal Revenue Service Form 990 tax return. If you recall, this is actually the issue that was raised where we had question as a governmental entity, or because Opebt is entirely supporting a governmental entity, of whether we had to file this or not. This is the reason, not filing these returns is the reason that they revoked our tax-exempt status, and we're in the process of getting that corrected. All of the past 990s have been filed, and this one was filed timely, and so all we need to do at this point, and the information is all there for you, but all we need to do at this point is receive this form. So if there aren't any questions, I'll take a motion.
Move it.
All in favor? Any opposed? All right. Next item is to ratify the claims listings. Can I get a motion? All in favor? Any opposed? All right. Next item is any reports or comments from trustees, staff, or interested parties. Does anyone else have any comments or statements they'd like to make? All right. Any additional information?
Glenn, please don't go.
Thank you. Is there anything you can do to prevent that? You know, as personnel director, I mean. We good? Okay. All right.